Welcome back to the Daily Nugget, daily property insights, one topic, 20 minutes or less, 7 days a week. Myself, Lotze, and joined by Andrew Armstrong, a mortgage specialist and a fellow property investor. And AJ, the question to you today is about lending for commercial property. Obviously, in the market space we've seen at the moment, a lot of people might be struggling or getting into the residential market, but therefore it means that they might consider going into the commercial market space. And how does that lending differ from the residential side?
Yeah. Okay, commercial lending. It's lots of people have this thought. I get this question quite a bit. Oh, what about commercial? What about this? What about that? And not so many take the plunge and get into commercial. Commercial can be very lucrative. You get good rental returns. Your tenant basically pays your outgoings. There are other certain benefits there. Talk to the accountants, of course. But how do you get the money on it? Well, a couple of ways. Your traditional way, where you get leverage against existing property, so owner-occupied property or investment property, so you can utilise that equity, or straight up get a cash deposit from Bank A and settle the commercial property with Bank B, which gets them removed from cross-collateralisation. But in some circumstances, if it was an owner-occupied commercial property, the typical LVR, on commercial is 65%, and that is dependent on whether or not it's a specialist property or it's a generic property. Now, I won't go into which is which, but a specialist might be a service station, and a generic might be just an industrial warehouse. That's probably the clearest examples there. The purpose, is it for investment, or is it going to be a business or an owner-occupied commercial property? And if it's an owner-occupied commercial property, they may lend you a little bit more in some circumstances. Again, it's all subject to how strong your business is performing, what's the profit in the business like, and where is the property, yada, yada, yada. But you might, in some scenarios, we've seen up to 100% lending on that. And very strong applicants.
And what about on the investment side? So obviously you said if it's on owner-occupied, they might give you more because depending on how good your business is doing, right? So if I've got a very successful business and I want to go into commercial units, great. My opportunities are a little bit more. What happens if I just want to go and buy the commercial unit down the road that has the corner dairy and the local fish and chip shop? And it's a pure investment.
Yeah, so let's just assume it's 65% LVR. We go and send through a commercial application. What they're going to ask is, what's your tenant like? What's the strength of the tenant? Is it coming with a tenant or is it untenanted? So what does the income look like? They're also going to look at what is the age of the building, what is the location, of course, but the age. Now, there's some really old buildings out there that don't have a particularly strong earthquake rating, and even though it might be a good deal, the bank might turn around and go, hey, look, this is a 10%, 10% of building code. We're not interested. It needs to be at least 67% or 80%, depending on where it is and what it is. So you need to consider that. And overall, they're going to need a registered valuation on there as well. So the process does take a lot longer to get approved versus a standard residential loan.
Yep, but the opportunities are there. You just got to work through it with your mortgage specialist.
Yeah. Work through mortgage specialist, whether or not it's broker or banker. But yeah, there's certainly lots of opportunity in that space. If you know what you're doing, know what you're looking at, and know your why. Why are we doing it? Are we doing it because we thought it was a good idea, or it's easier than getting residential, or are we looking for the big income payoff over time?
Now, I'm guessing the mortgage specialist will help people out, but is there financial institutes that are more specialized to the commercial side? I'm guessing there's maybe a couple of banks or a couple of other companies that are more in the front of doing commercial lending compared to residential lending.
I guess across all the banks, there's going to be much for muchness. It depends on their overall bank appetite, as they say, and the balance of their book that is residential versus commercial. So some banks are going to be better than others one month, and then the next month it'll change. We do use a lot of non-bank lenders to provide funding here, where they look at the commercial property and they look at the fundamentals of it, and they will approve a loan a lot easier without a lot of the hoop jumping to get it done. Obviously, the disclaimer there is that they typically have shorter loan terms, higher interest rate, interest only, of course, and they give you an opportunity to acquire the asset, perhaps change something in it, whether or not it's get a new tenant or give it a paint job or rectify some of those building code issues in order to refinance that back to a longer term loan with a bank over 10 to 15 years. So again, there are definitely lenders there that love commercial property and are quite happy to lend on it.
Awesome. Thanks so much for that, Andrew. And to anyone that has questions or queries, as always, just drop it in the comment section below, depending on where you're listening or watching. And thanks as always for coming over to the Daily Nugget, daily property insights, one topic, 20 minutes or less, 7 days a week, and hope to see you tomorrow.